Fractionally lower. For more, we're joined by Wayne Kaufman, the chief market analyst at John Thomas Financial, joining us live from New York. And still with us, our guest host, Michael Yoshikami of YCM Net Advisors. Thanks to both of you for joining us today. Wayne, let's start with you. Sentiment seems to be turning on a dime. Where does the market stand right now? Where are we in this rally that we've been seeing?
Everybody knows that the rally is getting a little bit long in the tooth. So news like today was probably an excuse for some people to take some profits, and then at the end of the day, when the news turned around, you saw they said, well, maybe not yet. But I have been watching for signs that the rally is weakening. We had some last week where, in spite of new highs in the indexes, market breadth on the week was poor, with only one day actually having better than 50% advancers, and that was only 55% on Wednesday. So we are watching for signs that the rally is weakening.
Yeah, Michael. Hey, Wayne, you probably saw the cover of Barron's talked about Dow 15,000. Perhaps you saw the interview with Jeremy Siegel on CNBC where he talked about the Dow going above 15,000. Can you make the case why that's just way too lofty of an expectation?
Well, you know, I'm not sure I would make that case. The market is short-term oriented when there's problems, but when the problems start to go away, people look longer term and they're willing to remove the risk premium. And right now, if you look at bond yields versus equity yields, you could certainly make the case that the market is cheap.
Well, Wayne, so the predictions that are being made is we're talking Dow 15,000, not in a period of long term, which I guess some might say is 5 years, but we're looking at Dow 15,000 this year, next year. Does it seem reasonable to you?
The market, I won't say reasonable or unreasonable, but I could see it happen. That's not a prediction, but I'll tell you why. We're just now starting to see numbers come out for 2013, and the market is projecting, based on these numbers, 12% growth. You've only got a 13 to 14 PE. So I guess what they're saying is that with some multiple expansion, it would be very reasonable to see S&P 1,500, 1,600, okay, and you can make whatever number you want on the Dow. You could add that. It has to do with the presidential election. I think that if there's a new president, people will give an expanded multiple. But right now, with a 13 to 14 PE, that's a low multiple.
Okay, so Wayne, real quickly, the money question. Tactically, what are you doing?
Well, it's been, up until the last week or so, it's been a broad-based rally, so there have been plenty of places to put money. The area I consider most exciting right now is the biotech area. There's three stocks that in biotech that I like. For example, Alexion Pharmaceuticals. They've got a drug that allows unmatched kidney transplants. In other words, you don't have to find a donor that matches, so you can use unmatched kidney transplants. That's really quite revolutionary. OncoThyreon, another company where they have a drug that has extended the life of lung cancer patients 17 months over current treatments. That's a long time for extension. And another company, Halozyme, they have a drug that allows other drugs to be absorbed by the body better.
Sorry, Wayne, we are out of time, but thank you, and thank you for the specific stock picks as well. Good to have you on the show, as always.
You're very welcome.
Wayne Kaufman of John Thomas Financial.